Hello traders and welcome back to the Forex Geek. In today's video we're going to explore a powerful candlestick pattern that can help you spot potential market reversals, and we are talking about the bearish belt hold, which is what you can see right here. I'm going to explain it. This pattern is a key signal for traders looking to capitalize on bearish trends and make informed decisions in the Forex market, or the stock market, or the crypto market. So by the end of this video, you know exactly how to identify this pattern, you understand the psychology behind it, and learn how to incorporate it into your trading strategy. So stay tuned until the end and watch so you don't miss any valuable insights that could enhance your trading success. So without wasting your time, let's get started. And let's first understand the bearish belt hold pattern. So the bearish belt hold pattern emerges as a single candlestick formation that signals a potential shift from bullish to bearish momentum in the market. So this pattern forms when the price opens at its highest point and continues to decline throughout the trading session, creating a long red or black candlestick with virtually no upper shadow or upper wick, trading wick. This is the wick. Let me zoom in. This right here, this trading activity under, they are called wicks. So there is no upper wick here. Price opened here. We were bullish initially, but we formed the high of the day with no wick, and we came back to close around here, around the close, around the opening, and we had this small wick under. There's always a small wick under the candlestick. So these green candles are just for context. This is the main candle. We're talking about the bearish belt hold candlestick pattern, and think of the bearish belt hold as a visual representation of market sentiment changing hands. So when you spot this pattern, it shows that while buyers initially pushed the price up at the open, sellers quickly took control and dominated the entire trading session. And the longer the bearish candlestick body, the stronger the selling pressure during that period. And the pattern's reliability increases when you spot it during an uptrend, as it suggests that buyers who have been pushing the price higher are beginning to lose their grip on the market. And the complete absence of any upper shadow or wick tells you that sellers were so aggressive that buyers couldn't push the price above the opening level, even once during the session. So remember, why this pattern can be powerful, you should always consider it within the context of the overall market structure and trend. So let's talk about how to trade the bearish belt hold pattern, and also let's hop on the charts to spot this pattern. So you spot this pattern frequently on the daily time frame and not on the smaller time frames like 5 minutes. Or no, you spot it on the daily time frame or higher time frames like the weekly, the daily, the monthly, and maybe a few times on the 4-hour. So this is the Apple stock, and we are on trading view, and this is the daily time frame, and you can see this bearish belt hold candlestick pattern right here, very clear. You can see we were bullish initially, then we had this candlestick pattern, the bearish belt hold, and let's spot another one. You can see this is another bearish belt hold. You see price opened, the candlestick opened here, had this push to the upside, we formed the high with little to no wick right there, and then we had the push to the downside to close. We had this wick below and close here, and we had this confirmation with the next candle giving us this confirmation, and then we had this massive push to the downside. So if you want to trade using the bearish belt hold pattern, the first thing is to wait for the candlestick to fully form. So never enter a trade based on incomplete pattern. Your entry signal comes when the next candle opens below the bearish belt hold's closing price, or if the next candle is also bearish and closes bearish, then you should consider opening bearish positions after your bearish belt holds candle and confirmation. So this confirmation helps avoid false signals and improves your trading and your trade accuracy. So also trade in line with the trend and also in line with key levels like support and resistance. For example, you can see here we were bullish, so and there was no confirmation right here. We had this candle open below the bearish belt hold candlestick pattern, but it closed as a bullish candle, even though it was an indecision candle, but it closed as a bullish candle. So we'll be looking to enter, and also you can use the volume to also validate your trades. So I'm just gonna add the volume indicator here to see where the smart money are entering the market. And you can see around this time we had this bearish belt hold. Yes, we had the rising selling volume right there, which is a major characteristics of the bearish belt hold, but the next candle was quite a very big we had quite big bullish volume right there compared to this example we had here, where after this bearish belt hold candlestick pattern we had a rise in bearish volume and momentum right here, and it was a sure way that to confirm that we should be entering this trade. You can see the next candle closed bearish, and we could be entering at the open of that candle to sell or short this stock at this particular time. And let me look for another example. We could sell it to the 50-day moving average, use it as take profit, or you could target major support levels like this one. So let's look for more examples of the bearish belt hold. So you can see the bearish belt hold forming here, and you can see this, the confirmation. We have the confirmation with this candle closing bearish, and we should be looking for selling opportunities. You can see this volume rising, selling volume right here, confirming that the bearish belt hold candlestick pattern, that it's a valid one. And you can see the bearish momentum, the bearish movement had already started, so we are quite looking for a way to continue this short movement, this selling activity. You can see we had another bearish belt. So this was a bullish candle, but price opened right here, and had this rise, but price closed below here, but it was bullish still. And you see the candle price opening below. You can see the price opening, the next candle opening below this pattern. So you understand this better on the when we discuss the bullish belt hold candlestick pattern. I'm going to go in depth into this type, but this still fits as a bearish belt hold, because you can see this little to no wick above, and this wick and the body right here with the confirmation. And you can also see this rise, increasing selling pressure around that area also. And after that, we could see that we could consider entering sell positions from there also to close, to take profit around that support level which we had here before we had the market change its direction to bullish for just a moment to retrace back into this support level. Yeah, so that is how you can spot the bearish belt hold. You can see another example. This is another wonderful example. So price was basically using the 50-day moving average as resistance, and you can see had the bearish belt hold candlestick pattern. The next candle closed bearish, also confirming this pattern, and you see the increasing selling volume, and you can see this support level. So shorting this from here or from here at the close of that candle, stop loss levels could be above the high of this bearish belt hold, and we just had just a 1:1 right here with this trade. So that is how you can use the bearish belt hold candlestick pattern. This was supposed to be a bearish belt hold candlestick pattern, but had a little wick right there. So it's not supposed to be any wick at the top of the candle, but had a wick below. You could consider it as a bearish belt hold, but you should trade it with caution. Confirm with volume. You can see the volume is bearish, also rise and bearish volume, so it's a valid one also. And the next candle closed bearish, so we could consider entering at the close of that candle to target major support levels like this one. Like it was a 1:1.4 risk to reward ratio. And that is it. For optimal risk management, calculate your position size based on the distance between your entry point and stop loss. Never risk more than 1 to 2% of your trading capital on a single trade, regardless of how convincing the pattern appears. So when setting your take profit targets, consider using a minimum risk to reward of 1:1 or 1:2. This means if you're risking 50 pips, aim for at least 50 to 100 pips in potential profit. So look for previous support levels or Fibonacci retracement levels as I've showed you to establish your profit targets. So for additional confirmation, consider these technical factors. The volume should increase during the formation of the bearish belt hold. The pattern should form near a significant resistance level. And also look for bearish divergence or momentum indicators like RSI or MACD, or you could use the moving average also as added confluence. So right traders, there we have it. Tips for trading with the bearish belt hold pattern. So never rely solely on the bearish belt hold pattern, combining with other technical indicators. We've talked about that. And also market context is crucial. The bearish belt hold works best when it appears in an overbought market or at a strong resistance level. So pay attention to the bigger picture and look at higher time frames to ensure you're trading in the right direction. So volume analysis is also very important. So right traders, we've come to the end of today's video on the bearish belt hold candlestick pattern. By now you should have a solid understanding of how to identify this pattern, the psychology behind it, and how to use it effectively in your trading strategy. If you found this video helpful, don't forget to like and subscribe to the channel. Also make sure to turn on the notification bell so you never miss out on future trading tips and strategies. So until next time, happy trading.